Hello, everyone, and welcome to another edition of the Forex Technical Market Update for Monday, July 27, 2015. We were off on Friday, and yes, I promised that I will be back on Monday, and here I am. I hope you all had a very good weekend. Off the bat, let me address something about why we focus on charts. I know some of you who have been listening to these videos a while, you have heard it already. But for newer folks coming in, they wonder why is it we do not focus on what's happening in the economy. And the simple answer is that supply and demand causes prices for a particular currency or a particular asset to move, and not necessarily what is happening in the economy. So if supply and demand causes a market to move, then all we need to do is to be able to examine what is happening on as it relates to supply and demand. And how we examine that is by looking on the charts. When I just started to trade, I used to focus on I used to focus on what's happening in the economy. And I would say, okay, for example, now we have a situation with Greece. I would say to myself, well, the euro is going to go down because the situation in Greece is poor. And then I would make decisions based on that. That in combination with technical analysis. And I found that I was consistently losing money trying to look at the economy and then predict where a currency may go depending on what's happening in the economy. Greater profitability came to my trading when I stopped looking at what's happening in the economy and just focus on what's in front of us. And this is price action. This is the key to understanding how to make money in the markets, and it's simply by following and examining and interpreting what is happening in prices. For example, currently the euro was in a fairly massive downtrend in the latter half of the year, and now what we're seeing a consolidation pattern here in the euro. And this is what we call a triangle consolidation. So the markets are just meandering between 115 roughly and 105 in a consolidation pattern. Knowing some rules of technical analysis would be able to guide you on how to deal with a consolidation pattern. So for example, 80% of the time, or roughly like that, the market will continue in the direction with which it came. And another 20% of the time, the market will reverse. Knowing this gives us an edge in the markets, and that's all we need when we're trading currencies. We just need an edge. And knowing this, that the market may break down 80% of the time, we can then position trades to take advantage of those rules. Another rule is that if a market is trending to the downside, for example, let's back up at this point here in this downtrend. We see that the market is in a clear downtrend. This was August of last year. More than likely, when we see a market in a downtrend, the trend will continue to the downside as opposed to reverse. So that then we can then formulate rules to trade with that will take advantage of that situation. Now, the market will not decline if it's in a downtrend all the time, but it's more likely to decline than not if we're in a downtrend. So we then have rules to take advantage of that. For example, British pound, Japanese yen. This market is in an uptrend, a clear uptrend. More likely than not, the market will continue in the uptrend. But the market could reverse at this point. This is real time here. The market could reverse at this point, and the trend could end, and the market could head to the downside. So that is why we have risk management protocols put in to prevent or to minimize our risk when a situation of a reversal happens. Or for example, if we get involved in a trend, if the trend suddenly ends, whether permanently or temporarily, we exit the market for a small loss. And if the market continues in our direction, we will make a gain. So just getting back to the answer, really, if you have a philosophy of how to trade, and my philosophy is essentially a trend following philosophy, then it's not really necessary to know what's happening in the economy. If a market is going down, we are looking to sell that market until it reverses. And if a market is going up, we are looking to buy that market until it reverses. I mean, it's for a simplistic answer, that is the answer. Okay, so taking a look at the euro, as I said, we are in a consolidation pattern here in the euro, and the charts are a bit slow this morning. I don't know why. We're in a bit of consolidation pattern, and we're in a triangle. And please note, we're in the middle of summer, and what tends to happen sometimes in summer, not all the time, again, just some of the time, is that the market can meander in the summer and do nothing. But normally when the markets are meandering, they are setting up for the next big move, and we as traders need to pay attention to that, because sometimes this market can bore you, and when it bores you, you may look away or you may do something else, and then a trend suddenly breaks out, and then you are not involved in the trade. And the reason you aren't involved in the trade is that you didn't take action beforehand to take advantage of that trade. Okay, so we're in a consolidation pattern with the euro. If we close above 115, then that will signal a broader pullback in this euro currency. And the euro has been performing fairly well across different currency pairs. So we could be at a situation where we could get a turnaround here in the euro. We just have to wait and see. Taking a look at the Japanese yen, another interesting market this morning. Wow, these charts are slow. Now the market Japanese yen is strengthening versus the US dollar, but as you can see, we are in a triangular consolidation pattern. And the thing to look for in the Japanese yen is to look at what the stock market is doing. If we see the S&P 500 break down dramatically and close below certain levels, then we could see a strengthening yen, and the yen could strengthen fairly dramatically across the different currency pairs. So let me just bring up a chart of the S&P 500 here. This is the S&P 500 stock index, and we see we're in a channel consolidation pattern. If we see the market break below this channel, we could see the yen strengthen fairly significantly. Okay, so keep an eye out on the S&P 500, because in the past when there's panic in the stock market and when the market is selling off, the yen can dramatically increase. So keep an eye out on 2040 in the S&P 500, and also the 1980 level. Close below those levels could issue a further sell-off in the stock market and a strengthening in the Japanese yen. Okay, now if you'd like to have these signals sent to your trading account automatically, what you can do is click on the link below. Yes, we're having some slight consolidation now, but after consolidation, the market normally breaks out and continues the trend. Now, one thing about trading, it takes patience to become profitable. So sometimes you may have trades or trades not taking, or they may be taking long to for you to see fruition, or you may get chopped out a lot. That's just a part of trading. And one of the reasons most people cannot make money in these markets is because they don't have the patience to actually see the trades through, to enter the trade, wait for the trade to develop, and then see it through. And if you don't have the patience or the discipline, you will not be profitable in the market. So, and this was something I definitely had to work on, because I, by nature, I'm a huge procrastinator, and I had to try and work on that so that I could become profitable at trading. That doesn't mean you will be profitable every single month when you're trading, but if you look at a year, you should see your account increasing rather than decreasing. Okay, I'm off. Thank you very much for listening. If you want the signals, the patient signals, the long-term signals, click on the link below this video, and have a good day.